Hello, this is Rachel live from Kalkine Studios in Sydney, and you're watching the early trades. Now, the Australian share market was trading lower at the open, and that's despite strong results lifting some shares and also AGL's rejection of an unsolicited bid buoying their shares. The S&P ASX 200 index was down 0.6%. Altium shares tumbled 8.4% after reporting their results, leading to a weaker tech sector. Block was down 6.5%, while Life 360 dipped 4%. BlueScope Steel saw their shares dip 3.8%, and that's despite reporting the best half-year performance in its 20-year listed history. AGL Energy shares are up 8% so far after rejecting a bid from a Brookfield-led consortium, pushing it above the offer price immediately. Endeavour shares were up at 10.1%, while Chorus rose 7.4%, and the A2 Milk Company was trading 2.5% higher, with all three reporting solid results. So let's move on now to the newsmakers for today. Dicker Data shares are in a trading halt as they prepare a deal to buy security and information technology from Hills for an amount thought to be around $20 million. Hill's SIT division generated $123.2 million in revenue in financial year 2021, with $98.7 million of the total from security and the remaining $24.4 million from its IT products. Hill's SIT division was around 2,000 customers, around 85% of which would be new to Dicker Data. And Zipco confirmed it's still in talks with junior buy now pay later provider Sezzle as part of a trading update where Zip underlined its confidence in the outlook for the business. A cash loss of $108.1 million for the half at the EBITDA level was realised, pushing to an operating cost of $204.5 million. Reduced running costs are targeted for the second half as Zip focuses capital on markets with a near-term pathway to profitability. Over in the UK, it'll book an impairment of $44.7 million for goodwill. Its interim results are due on the 24th of February. Revenue increased 89% and transaction volumes 93% for a revenue margin of 6.7%. Merchant growth was up 113% and customer growth 74%. Interest expense as a percentage of transaction volumes fell to 0.7%, down 0.4% of a percentage point. Higher production volumes have helped Oz Minerals deliver a strong 2021 financial year result, with earnings and profit both jumping. The result was driven by increased sales of copper and gold, both at higher prices than a year ago. Oz Minerals declared a final fully franked dividend of 18 cents, up from the 17 cents a share dividend it declared a year ago. And Self Wealth's net loss has widened to $2.4 million. The budget broker blamed the result on increased product investment costs as revenue for the period climbed 17.7%. Client cash balances climbed 53.3% as at the 31st of December. Shares in the budget broker, which recently launched the option to buy and sell US stocks, are down 69.6% over the last year as competition in the space intensifies. And Star Pharma has improved its loss in the first half of the 2022 financial year, driven by strong sales of its Viralise product, an antiviral nasal spray. The company's revenue rose 200% due to significant sales of Viralise in Vietnam following the launch of the product in December. It reported a loss of $8.4 million for the first half of the financial year, an improvement on the $10.4 million loss it reported a year ago. Well, that's all for now on the early trades. Stay tuned to Kalkine TV with many more shows lined up for you with updates across the economy, markets and sectors. This is Rachel signing off for now.